Welcome back to another YouTube video, and today we're going to be doing a stock market portfolio update video, as I've not done one in a while and it's changed a little bit since the previous one. Obviously the last one I showed you some stocks that I got into because I believe they're a bit undervalued and I took advantage of it, so we can share the profits that I made from that, because I did actually end up selling, and you'll find out which ones they were in this video. So let's get straight into it. So the first one is Apple stock, and obviously I've had this the exact same time all the time. I've always had 7 shares of Apple, not bought more, haven't sold, don't know why, just I've always had this for the last 3 years or whatever it's been, and I'm up 91%, and it just shows that if you buy strong fundamental companies that are smashing it in the real world, obviously, and always growing, although they're starting to they are growing still, but obviously they've not got that crazy growth that they used to have, but they still are performing in the stock market. I'm up 91%, and within the last month they're up 4.6%, so yeah, up 91% on that. Palantir, obviously this is my biggest holding in the portfolio. I've got 546 shares. I've always really loved this company. I've always said in the past, obviously you can even look through my previous videos, especially the ones about 3 years ago, I got into Palantir very early on, but it doesn't always mean the earlier on you've got into a stock, the better, because I was paying very, very ridiculous prices. They were way too overvalued when I was buying them. Sadly, I didn't understand valuations as such back then, and yeah, it's just a bit of a kick in the teeth a little bit, because obviously I could have got it at such a better price and waited for when it was at $7, $8, $10. And I know you can't always time the market, but things like that you can kind of time, because they were always going to go down because they were so overvalued, so overhyped at the time, that I should have just waited. But I've learned a lesson, and that's the whole point of this whole channel really, is to just learn from mistakes and show you my mistakes, that you guys don't make those mistakes. But anyway, there's a massive debate obviously that you could say it is overvalued right now, like it is overvalued. I'm up 124%, and it's $42 a share. So even if you get it wrong and you have picked a company that is gonna perform well, give it a few years, when their profits start turning around and become a profitable company, then things like this happen. But I think their forward PE ratio is about 100 at $43. I might be wrong there, but that's not too bad, to be fair. That's not screaming mega overvalued for a company that should be, hopefully, this is a big if as well, doing 30% year growth every year. So it does need to really hit that, otherwise obviously the share price will skyrocket down. But I think this company is going to do some serious numbers in earnings, and it's going to be interesting with earnings. I wouldn't be shocked though if obviously the stock market and the stock does plummet on earnings, if it's not exactly the growth people want in, or it might, because it's gone up ridiculous amounts. It just has. But I do think the new floor price for Palantir will be like $30. That's kind of my price that I think it will be, and my average is $19, so it's not too bad at all. But if it got to $30, I'd be buying more. I would. PayPal, obviously we bought this probably around January time, was it? Maybe before, last year December, maybe. I'd have to look. I got 119 shares of this. Saw that this was a very undervalued stock at the time. What was my price I was getting in? $52. So yeah, the whole fintech industry at that point was really down in the dumps. It kind of still is. And yeah, it's now $81 nearly, and I'm up 44%. So that's a good one. I still think I'm still holding on to this. I think it'll go to $100, $120. That's when I'll start thinking of selling. But yeah, PayPal, holding that for now. So Sofi is an interesting one. So this is the one I've been buying up recently. I've now got 663 shares. So I used some of the profits that I sold from the companies that I'll mention in a minute to put into Sofi, and I think this is going to be a really good stock, because for one, you got to think this is a new, it's kind of a bit of a I don't know, it's a bit of fintech, so it's got a bit of technology, and it's also the kind of traditional kind of banking, and people don't know whether to put it in the banking kind of sector or count it as a technology business. And well, it's quite funny because obviously their name is Sofi Technologies, but you've got to think as well, like, this is really targeting my generation, the generations, like the millennials, the Gen Alphas, and I think this is kind of a bit of a future stock to hold for the next few years. And yeah, I think it's got huge potential. But then also as well, you got to think, like, the banks nowadays, like the big banks, they've got to keep those branches open, and some of them have got 3,000 odd branches, and that's very costly, whereas SoFi doesn't. It doesn't need that. It doesn't need them outgoings. So it's got a lot of benefits so far, because obviously people in our generation don't really care about going to a physical branch as much as obviously the older generation. And I know that's obviously opinions of like, oh, I'd rather be able to go to a branch and that. And some people in my generations are like, would like to physically go to a branch. And so would I, but also I am kind of I'm very more in like technology, and it's a bit of a, I don't know, I'm rambling a bit there. But anyway, they hopefully in the next earnings will hit profitability. So 4 quarters in a row hitting profitability. And that will be a good turning point. Just like Palantir was, once it started turning a profit and it hit 4 consecutive quarters being profitable, that's when it started flying. The stock started flying, and that's when stocks will start flying, because the earnings per share start turning profitable, and that's when people start jumping into the stocks. And I think they've really smashed earnings throughout, and they've gone through some really hard times, the pandemic, high interest rates, etc., and they've survived, and they've done very well. So I think SoFi is a really good stock to be holding. Obviously, it's a low cap stock, so just don't put your bloody life savings in. But not financial advice as well, by the way. Like, guys, I'm not a financial advisor. This is just what I'm doing with my money. And I do think we could start seeing a bit of a big upswing with SoFi. Tesla, so this is another interesting one. I'm looking forward to earnings for this, which is this week, actually. And I am also considering putting more money into Tesla as well. I do want to see what earnings is like, I think, before. And if they don't do too well with earnings and the stock price plummets, then, well, I'm going to be buying. I'm going to be buying quite a lot, especially if it goes under $200. So, yeah, the plan is to get more shares of Tesla as much as I can. And, yeah, because Tesla at the moment, it's break even, and it will see its heyday. It will start becoming that kind of stock where everyone's going. It's just the way it is, the nature of stocks. And at the moment, people aren't interested in Tesla. But like we all say, it's not just a car company. And once them robots are crazy, and it's kind of scary how actually like humanized they seem, and some of the things they were saying, it's quite scary. But like, wow, like they've done a very good job on how they've created them, because that's the biggest thing for me, is how can they make them proper humanized and the type of the jobs they can do. And it's sad where the world could be going, in the sense of, especially like jobs like working in, I don't know, like Tesco, Asda, McDonald's, all them kind of places. They could just start replacing them with robots that could just work 24/7 and do the job eventually once they get proper advance. And that's a scary thought and a scary thing, and that's why I've always been very I don't know what the word is, like really conscious about investing and making sure my money's working for me and capitalizing on as much as I can, because I feel like there will be a stage in the world where like we could be in a spot where I don't know what I'm trying to say, but like if you don't have the type of money, you've got less choices, or less choices in what's going to happen. Because what happens if companies do start putting the robots in, then that is your job. And eventually they decide we can't make you redundant because we don't need you anymore. Like, that's a scary thought, like, because then you've got to make money to obviously to live. And if you're in the position to have a certain amount of money where you could rely on that, then obviously it's a good thing. And that's why I'm very conscious, and especially with my field as a videographer. Like, I wouldn't say as a videographer they could kind of replace that just yet, but like maybe editing. But even then, it's a bit of a hard one. But regardless, it's big conversations we could talk about with Tesla. I could do a whole video on just talking about it and talking to you guys about it. But yeah, that's Tesla, and I'm break even. First one I sold was JD.com, and I saw this was a very undervalued at the time when I bought it, and I managed to sell for a £360 profit, which is really good, actually. Very happy with that. And does it not tell you? I don't think it tells you what price I bought it at, but yeah, ended up selling JD.com and got £360 profit for that. Nvidia, I ended up selling Nvidia because I just looked at it as like very solid company, but like growth wise, obviously they're going to smash it, but like because they're such a massive company, massive market cap, how much more can they do compared to other companies? Do you know what I mean? It was just kind of weighing up my money in the distribution of putting it into something else, and especially with the holding I had, I didn't have a huge holding in Nvidia, so it kind of made sense to just move that money somewhere else. And yeah, I managed to make £239 from Nvidia. So in total, my portfolio is worth £38,424. That's pretty decent. I'm happy with the growth it is. I mean, at the moment, this is one thing I completely forgot. I've not shown you this in ages, but we're up 56% in the portfolio. Obviously, we are at pretty much all-time highs, and I am expecting a bit of a correction coming our way for the S&P 500, the QQQs, and all the stocks. So I'm not being like, do you know what I mean? I know what's to come, and I'm making sure I have cash ready to be buying those dips. So, and people might say, oh, why don't you sell Palantir because it's really high up in price, blah, blah. Yeah, I could, but I'm not here to trade the stock. I'm not here to swing trade. You don't like, if I did it like that, then selling at $34 was a good price to sell at. If I sold it then and waited for it to dip, it's run up all the way to $43, and then that's when you might then go, panic and buy at $38 or whatever it was. Stocks that you believe in and want to properly hold, just hold them. The ones that you're thinking of swing trading or trading, they're for trading, and that's how you should leave it. Stick with it. Don't just keep trying to time the market. Anyway, I hope you enjoyed this video. Subscribe if you're new, give this video a like, and I'll see you guys in the next one.